Hi my dear friends, we are on the peak of World Cup. Imagine two of our best players like Rohit Sharma and Virat Kohli taken ill, not able to play a particular match. And if there is a provision to add some runs based on their average, so won't it be nice for the team? Similarly, in your business, something happens to your key players, unfortunately. So if the compensation given to the business, won't it be nice? Exactly. There is a provision called Keyman insurance for it. We are going to discuss about Keyman insurance and partnership insurance among other corporate insurance. Please stay tuned till end of the video. So please subscribe, comment and share. Stay tuned. Yes, my dear friends, let's see Keyman insurance. Before going to it, we will see the types of corporate life insurance. So you know that in any company you have got a group insurance schemes are there. Group insurance, gratuity scheme. Number 3, Keyman insurance. Number 4, partnership insurance and employer insurance. Employer-employee scheme. So group insurance means basically if there is a 20% and above, generally the 20 is the basic. So if number of people in a group, any society, trust or company, firm, if 20 people are there, they have kind of a group insurance can be given. It's depend on company to company, it may vary, but in group insurance the certain kind of people, all the people are covered, the same sum assured is given. Here in group insurance the money will go to the individual if something happens to that. Very less premium, it's a very good scheme. So if you are in more than 20, definitely you should take group insurance. Then gratuity scheme. Gratuity scheme, everyone knows that if somebody has completed 5 years service in any organization, they are eligible for gratuity in India. Supposing something happens to the person, if they are not taking the gratuity scheme, whatever the entitled amount that will be given. Supposing a person who has completed 5 years service, he has got 32, he is around 32 years old, but how much money will give? The company will give you only those number of years service, gratuity will be given. That is what is entitlement. If group gratuity scheme is taken, the entire balance service, supposing if he has to retire at the age of 58 or 60, depend upon the company rules, service rules. So balance number of years also covered as a term assurance within the gratuity scheme. So this will be given to the individual family as if he has served for 58 years, and then whatever the basic salary on which he has worked, based on which it will be given. So company has to give the premium along with the savings contribution to the LIC of India, join the group gratuity scheme, that will be given. Okay, it's a very good scheme. If your company has not joined this group gratuity scheme, please join. So okay, this is one of the best group schemes available under LIC of India. Then third is Keyman insurance. So today we will go about Keyman insurance. I told you in the intro. Partnership insurance also we will discuss. It is the partnership insurance firm. Third is, fifth is employer-employee scheme. Employer-employee scheme, here, every employer has got an insurable interest on employee. The employer pays the premium to the employee, and then employer can take income tax benefit for it as a expenses. So that is also discussed in detail. The suggestion is appearing now. So you can just click on that. Very detailed video I have made. Here also money goes to the aggrieved employee or demised employee's family. So here in 1, 2 and 5, the money goes to the family of the employee or the person on whom we have taken the policy. But here in Keyman insurance, the key difference is in Keyman insurance and partnership insurance, the policy money, in case of death of Keyman or partner, the money will come to the entity, business entity. So if it is a partnership firm, it will come. If it is any private limited or any other company, in case of loss of Keyman, the money will come back to the company. In case of, if a director is a Keyman, in case of death, the money will come. This is the key difference, my dear friends. That is why Keyman insurance has got a special place in any corporate insurance setup as well as in partnership insurance. So we will see the next one. Keyman insurance is a critical insurance policy that insures on the life of employees or directors whose contribution significantly impacts the firm's success. That is the underlying one. So you cannot give Keyman insurance to each and everyone. right? Like group insurance, chalo, I will take all the 20 people or 100 people or 1000 people in my organization, I will give Keyman insurance. So if something happens, they are in the risky employment, I will give them Keyman insurance. Something happens, the company will get benefited, then out of which I will give something to the individual. No, it will not, it is not like that. They have to have significant contribution impact of the film that has to be assessed. So that is the keyword, my dear friends. Keyman insurance, what it happens, it protects the business from losses. Suppose if somebody is involved in a turnkey project, so if the employee dies, then company will be compensated. Loss may happen because of hard to find replacement. So replacement is very difficult, trained employee. Otherwise, the person who is very much expert in any turnkey project or any sort of project where his contribution is irreplaceable, but company will lose a lot of money because of his unavailability. So, and training other person also very, very difficult. So, in that case, Keyman insurance is given. So, this is the two key points, my dear friends. You cannot just give to everyone. Then estimating Keyman insurance, there is an estimation also there. So what is the monetary value of that person? So that should be arrived. So how it is arrived? The amount of Keyman insurance typically determine the monetary value of setback that business would face due to the death of that key employee. These are all the key points we have to bear in mind when we are taking Keyman insurance. When not to consider, yes, Keyman insurance will not be considered if the company per se is making losses. See, company is making losses, there is no Keyman. How it is possible? Except in very, very exceptional circumstances. Exceptional means the insurer will assess whether there is an exceptional circumstances where the Keyman should be given or not. Otherwise, if a company is in declining profits, it is an established company, declining profits, if you give Keyman insurance to those company, definitely it will be meaningless. So such loss making company, Keyman insurance will not be given, right? Then Keyman is an employee or a director. Who is a Keyman? Employee or director whose services significantly affects the profitability. The employer is responsible for paying the premium. So you cannot ask that Keyman, why don't you pay the premium? But only the employer is responsible for paying the premium of that policy. Multiple Keyman. There can be multiple Keyman also, more than one Keyman. Not all directors need to be proposed under Keyman insurance. Only term assurance plan is allowed. You cannot give any endowment plan or pension plan, something like that. Here, term assurance can be given, right? Term assurance means in case of death, you will get money. If he is surviving the term, no money will be given back. No online plans, no e-term plans. This 825 is a e-term plan that cannot be given. Only offline plan can be given. Financial requirement. The insurer will assess with the proof of income, audited accounts, balance sheet and profit and loss statement for the past 3 years must be provided for business concern and the Keyman. So both the Keyman as well as the business concern, both will be tested. Shareholding restrictions, yes, if a director is an individual or company, should not exceed more than 75%. Okay, shareholding of the Keyman in the company should not exceed more than 75%. And family shareholding, if it is a family shareholding, it should not exceed the entire family 90%. The family includes Keyman, spouse and minor. Put together, it should not exceed 90%. So it is for the family business also, there is a restriction, and if it is a company also, restriction is there. That is the 75% and 90%. Types of Keyman insurance we'll see. Keyman comes in various types tailored to different business structures and scenarios. So number one, Keyman for limited companies and private limited companies can vary based on individual involvement and financial factors. Keyman without shareholding. Here, allowable Keyman. So without shareholding means he is a key employee. He might be a general manager. He must be an executive director, but he doesn't hold any shareholding. But for that person also, Keyman insurance 10 times of their annual salary as per the form 16. So this firm again must be profitable and with profit for last 3 years, meeting the specific criteria. With shareholding, maximum allowable insurance. If a person is holding the, as told earlier, up to 75% of shareholding, maximum allowed insurance cover of 5 times of the average of net profits or 3 times of the gross profit. So net profits 3 times, net profit 5 times, and gross profit 5 times, 3 times, which depending upon the lower figure, whichever is lower. So it is for the people those who got shareholding. And multiple directors. Yes, more than one director may be Keyman. Keyman Insurance decide for more than one director, the maximum cover amount is distributed. So as we said earlier, 3 times of net profit and 5 times of gross profit, the maximum cover will be distributed among them. So you can equally distribute it, or you can distribute one person higher, other person less. So multiple directors, you can distribute accordingly. Some person might be contributing 60%, you can give to them, to 40% to somebody, or 20 plus 60. So whichever the combination you would like to give, you can give for multiple directors. And Keyman Insurance for key employees, non-shareholders. So as we said earlier, 10 times of latest annual salary pay as per the Form 16. Profitability of firm and meeting specific criteria will be taken into account. And let us come to partnership. So very important, my dear friend. If you are a partnership insurance, I strongly suggest you should go for partnership insurance. Partnership insurance is a specific type of insurance designed, business structured as partnership. It addresses the unique challenges in a partnership firm. No, it is not easy to find partners, right? In case of death of partner, what will happen? We will see those scenarios. So before going to that, for key partners in partnership firms, the maximum allowable cover is 3 times of average 3 years profit, or 5 times of the same, like 5 times of the net profit. So gross profit 3 times, and 5 times of the net profit. The same applies to previous one also. If I have told anything vice versa, please correct it. Keyman Insurance for partnership firm have different criteria for Keyman Insurance, primarily based on financial performance of the key partners. So what is the nature of partnership firm? It is a close-knit business being run by partners themselves. This can lead to difficulty when a partner passes away. If a partner has got a unique ability or unique clientele, so if the partner passes away, that profitability will not come. You cannot replace that partner. A partner family may not be able in a position to fill that gap. So you may be forced to sell out. We will see all those challenges. See, challenges for partners that heirs are not wanting to take over the partner's role. It is not necessary that a partner family is as good as himself. So in case of death of that partner, the family may not be able to take that role. Financial difficulties in buying of a deceased partner share. Supposing if 3 partners are there, 33%, one partner expires. Somebody has to buy that 33% of partner's share. No, it is very difficult for other 2 partners. So they end up selling. Selling means outsiders who doesn't understand, who might be a competitor. That is a very difficult proposition. In most cases, remaining partners prefer to buy out the share of the deceased here instead of involving. See, 33% is there. So one partner dies, you have to take out that 33 or 34% between these 2 partners, 17%, which will be very difficult for this immediate financial burden will come to the existing partner. So capital lump sum requirement, that of a partner, substantial capital lump sum to be provided to the by the surviving partners without advance provision. This can lead to need to borrow. You may have to borrow again capital fund for repayment to the deceased partner's estate. That is also very difficult proposition. And business continuity of partnership firm also affected because of the any untoward incident of the partner. Partnership insurance ensures business continuity by addressing the financial challenges and potential disruptions that can arise when a partner passes away. So in that case, coverage of all partners is very important. Supposing if your balance sheet, that is 3 times of the gross profit and 5 times of the net profit, if you are getting that money, so it is easy to cover the loss. In case of the estate, you have to give it to the heirs of the parent, heirs of the partner. You can give that money, and then you can purchase the whatever the share he was holding. right? So all partnerships should be covered under partnership firm insurance. Ideally, all partners should be covered. It is not that one partner is covered, other two partners are left out. So you have to cover all the partners, because what will happen to one partner or other, you may not know. Insurance plan type. Partnership insurance typically allows only term insurance plans, which are well suited to the specific needs and challenges. So here also, as in Keyman insurance, here also in partnership firm, only term insurance is allowed. And the common requirement is what? Keyman insurance across these types require the business to meet common requirements, including profitability, historical profit records, other financial considerations. So that's it, my dear friends. Here today, thanks for watching. This partnership firms, if you are an advisor, so go and search for partnership firm, advise them with this video. If you are a partnership, if you are holding a partnership firm, and definitely take this video and then put it in comment box what all the things you have learnt. And then if you want to take partnership firm insurance or Keyman insurance, kindly contact my advisor, will contact you. Thanks for watching. Please subscribe, comment and share. Thank you. Bye bye.